Good morning, Paul Georgie from Allendale. It's June 12th, Wednesday morning, and USDA supply-demand report day. The market's overnight quiet, trading in a relatively narrow trading range. Corn off a little bit. It could be finding some pressure from the talk that there will be increasing ethanol exports, which would create less demand for corn. So that's causes some weakness in the corn market this morning. Soybean markets are stronger because of the strength in the meal. Meal basis jumped yesterday again. We've seen, and with that strength, we're seeing that trickle down into the soybeans and showing some strength there as we got extremely tight supplies for old crop. That is boosting new crop prices also here in the futures overnight. The wheat market, higher production coming out of Australia is one of the focuses there, and that is certainly weighing on a wheat market that is finding pressure around the world right now as countries are giving their estimates of productions and showing an increase in wheats from Europe to South America to Australia as well. So the another fact that is highlighted here today is the Australian farmers' strike. They voted yesterday to go on strike. They're going to go to strike beginning on Saturday through Wednesday, which means they're going to stop selling agricultural products, which should not impact the exports and the crush that's going on in Argentina. They're trying to make a statement about the economic policies, and therefore is also providing a little bit of support, because any disruption in soybean movement around the world is creating support for our markets here in the U.S. The big thing is the USDA report this after at 11 o'clock. Trade is expecting that acreage can be shifted in corn, yields can be moved quite a bit in corn. Beans, they expect increase in acreage, a decrease in yield. We went back and looked at the past 20 years and found that the USDA only changed acreage and yield slightly in this report 4 times out of the last 20 years. Also in soybeans, they changed yield 2 times out of the last 20 years and changed the acreage and never on this report, waiting until the June 28th report on the planted acres numbers that come out on the 28th of June. So could certainly cause a surprise. The USDA seems to have surprises for everybody in these reports, so it certainly could change, but don't get excited if there isn't any change, and no change may actually turn out to be a negative, as many are looking for some supportive numbers to come out of the soybean complex. So we'll monitor that very closely. I want to remind everybody that Rich Nelson, our chief strategist, will be doing a webinar shortly after the report. It should be out by 12 or 12:15. You can look at that on YouTube. And if you got any questions in the meantime, don't ever hesitate to give us a call. In the livestock trade, no deliveries against the June contract last night. The hogs are definitely leading the charge in the livestock complex as their prices continue to move to 2-year highs. The demand for pork product especially, continues. Cutout values there were up 138 yesterday. Beef quiet, choice down 19, select up 72. The cattle market yesterday found support on some fund buying, and the spread between cattle and hogs have gotten to the point where cattle futures are enticing again for investors, and that could be a reason for some of the strength. We've seen some fund buying there, and the cattle contracts need to see some demand for product is the struggle that we're seeing. Although the increase in pork prices now make beef more competitive even at their higher levels. So some positive things going on in the livestock, which traders have been monitoring and trading more here in the last couple of days as the grain markets consolidate ahead of this report. So stay in touch with Allendale's research. We'll keep you informed the best we can. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning.